Have you ever wondered the hidden secrets behind successful Bitcoin trading? Well, today I'm going to show you the most crucial and yet most often overlooked aspect of trading that turned a lot of my losses into gains. But first, let me tease you with a little secret. So if you've heard of the term range trading, you'd know that the market ranges, especially the crypto market with Bitcoin, over 70% of the time. To understand the concept of range trading, it changed everything for me. And when I just first started trading, I was full of excitement, full of ambition, and I dove headfirst into the market thinking, I'm gonna make bank, I'm gonna make fortunes. But instead of raking in all that profit, I found myself making mistake after mistake after mistake. Now, I was blindly chasing trends. I was chasing bull trends, I was chasing bear trends. And I was hoping that I was going to catch the next trade. I was hoping that the next trade was going to be the winner. Okay, so I took lots of losses, and it's part of kind of the fee you pay for learning, essentially. But it didn't change until I decided to dig deeper into trading ranges and understanding the concept behind them. I learned from professional traders, and that changed the game. I think the turning point for me was when I finally grasped exactly what a range is. Okay, and I realized to succeed in this volatile market, you have to understand, the predictive probabilities within a range. Okay, so what I did is I identified my range and I started using indicators to reinforce my supply and demand levels. I wait patiently for market structure to change at those levels before I even touch a trade. So what exactly am I talking about? What exactly is trading a range, and how can you take advantage of trading ranges? Again, finding those high probability zones. So let's take a look at a range and let's see a nice schematic about how range trading works. So here we have it. Here we have a standard range. Okay, so first things first, we're going to identify the range high, identify the range low. Okay, we're going to wait for price to rally up to confirm our range. Now we know we're in a range. So we've got our range here in yellow. As soon as we've got our range in yellow, what am I looking out for? I'm looking at market structure. I'm saying, okay, is price leaving its footprint? Do we have any supply or demand zones within our range? Here we can see that we've got a 10-minute demand zone. So what am I going to do? I'm going to draw that out. So I draw that out thinking, well, this is a high probability area for price to react from. Okay, we may have perhaps another zone up here. Perhaps that left the demand zone, or a supply zone. And if it did, I would draw that out as well. Okay, so I would draw that out to make sure I've got that marked out. All right, wherever I see it, I would draw it out. Well, after I've done that now, I've identified my range, I've plotted my supply and demand zones. Next, I'm looking to use my indicator to see, all right, where is price likely to bounce from? The indicator I like to use is the Fibonacci retracement, the Fib tool. And what I do is I simply draw that from the high to the low, so from the range high to the range low. And what levels am I looking at? Well, I'm looking at the key levels, the 38% level, the golden ratio, or the 786 level. All right. Here we have a beautiful reaction of that 786 level. We can see price rallies down, breaks structure, leaves this demand zone, rallies up, and then has a nice break of structure over here as well. Where is that break of structure? It happens right there. Okay, break structure bearish, and I would be looking to enter that trade at the retracement. So I'm looking to enter a short there at that retracement leg. Okay, so my short would look something like this. That would be a nice trade off of a range. Okay, all right, so that was based off of a fib retracement. What about based off of demand zone? So we can see that this level we marked out earlier, we can see that price continues to come all the way down, and as soon as it touches that zone, it protrudes up. Okay, so again, that's another level that I can look for a trade. So I'm waiting for that break in structure. Yep, the break in structure happens. I'm game. I look to enter my trade at that retracement. Okay, I look to enter a nice long trade at that retracement, so we can enter a long right about there. Okay, now this trade is slightly risky. Why? This trade is riskier than the one I took earlier. Why is that? Well, whenever we're trading ranges, you can't forget premium and discount. You can't forget that. Now, what is premium and discount? Premium and discount is very straightforward. within every range, if we draw a new range, within every range, the 50% mark of your range, all right, is your equilibrium line. Okay, below that 50% mark, we call that the discount region. Okay, above it, we call it the premium region. Now, we're always looking to long in our discount region. We are not looking to long in our premium region. We're looking to short in our premium region. Okay, why is that? It's common sense, really. If you go to the shops, let's say you go to Asda, you go to Lidl, you go to Tesco, or if you're in the US, you go to Walmart or McDonald's. When the price is low, you're looking to buy. You're looking to buy when the price is low, because everyone, the human brain thinks, right, I want a discount when the price is low. Cheap price, great bargain, 2 for 1, bang, let's get it. So you're looking to long or buy at discount regions. You're looking to short or sell at premium regions. Okay, so when the price is high, you are looking to sell. Okay, now if you had a mortgage, or let's say you've got a house, or you've got a boat, or you've got a nice trainers that you want to sell, you're probably going to want to sell that when the price is really high, when the value for that trainer is really high. Now that's why we're looking to long in premium region. Sorry, I said that wrong. We're looking to long in discount region. So we've got a nice long trade over there. And we are looking to short in premium region. Okay, common sense, right? Just common sense. Buying and selling, supply and demand. Okay, so this is a difficult trade now. All right, because if we think about our equilibrium line would be round about here. Okay, if we were looking at this trade. And it looks as though this is already in our premium region. So really and truly, you shouldn't be looking to long here. Okay, so always have that at the back of your mind when you're trading ranges: premium, discount, premium. Okay, all right. So we're gonna get rid of that. Now, in the case that this break-in structure was slightly further down, okay, in the case we had something like this instead, okay, where the break-in structure took place slightly lower down. So I'm going to just manipulate this example so you can see what I'm talking about. Yeah. Now this would have been a decent trade. This one I would have taken. Okay. Why? Because it's still within our discount region. So that means I can look for a long in this region. All right. So I'll look for it to break structure and enter the long at that retracement leg. All right. So that would be a decent one. Remember, stop loss below that low. So be really safe below the range low. But you have to think about your risk to reward management with that. Okay, so those are your 2 internal trades that we've taken using just a fib tool. Another tool that you can use to take these trades is your fixed volume indicator. Okay, now your fixed volume indicator, it will help you identify where is the value area high and where is the value area low. Okay, I'm just going to see if I can find it for you so that I can show you exactly how it works. So here we have it. We have again a manipulated fixed volume indicator. I'm going to just copy that, and hopefully I can paste that nicely into our example. Okay, kind of does the job. I'll drag it down. All right, so if we imagine this is our fixed range indicator, our fixed volume, we can see we have a value area high, which is a high price where a price where a lot of volume was traded. Value area low, a price where a lot of volume was traded as well, and a POC, okay, point of control, where lots and lots of volume was traded. Okay, and this is based off of price. So this is another indicator you can use to identify where are my turning points going to be. Am I going to short at that value area high, and am I going to long at that value area low? I absolutely love my value areas to be confluent with my supply and demand zones. And just to add the cherry on top, if that's also confluent with your fib zones, well then there you go. All right, so those are your higher probability trades. Okay, so what else do you need to be aware of? Now, those are your internal trades. Now, as far as your external trades, or your range high and low trades, you're looking to enter short at your range high, and you're looking to enter longs at your range low. Okay, remember, for each and every one of these trades, we're looking for clear market structure changes. All right, so make sure you're looking for your confirmation before you enter these trades. So we're looking to short there, we're looking to long there. Okay, but be careful. As we approach this level, make sure that you're not seeing a close above this previous level. Make sure it's just a wick. I like to call it a pump fake. It's just a fake. It's like, haha, we're going up, no, we're not. Okay, and what does that look like? That looks like this. Well, the candle we expect, or the bar we expect at this zone, should look something like this. All right, so it's a bar. It doesn't close below the zone. It doesn't close above the zone. It simply wicks it. So let's draw a nice wick. Let's see, that's our wick. We expect it to look something like that. Okay, that's not the best drawing, but you get the idea. All right, so that's what we're expecting at that level. Okay, that's better. All right, so something like that, the nice wick. Make sure it doesn't close. Okay, and if it does close, make sure it doesn't close aggressively, because if it closes aggressively, then you don't touch that. Okay, so that's it. We're looking for a trade at that range high as well as the range low in terms of where to enter. Those are the high predicted probability areas to enter your trade. Okay, so let's see. Earlier I said, Bitcoin ranges a lot. The market ranges a lot. Well, let's take a look. Let's simply go on to 15 minutes and let's see how often the market ranges. All right. Well, let's actually go on a 2 hour. So we can see already we've got range over here, range over here, range over here, range over here, big range over here, another mini range over here. And I know these are ranges because they fit the criteria. Okay, and you can check. Range over here, another range over here, range over here, which we can look to play, range over here. So as you can see, Bitcoin ranges a lot. So make sure you master the art of range trading. Okay, so there you have it. That's a secret to unlocking profits trading Bitcoin and any other asset really using ranges. And if you found this video useful, if you found it educational, if you found it helpful, or if it's just giving you a little bit more clarity as to how ranges work, do remember to follow this channel for some more insights and tips. Okay, now don't miss out on the opportunity to refine and close that performance gap when it comes to your trade.